some huge breakout, but really it was a bull trap, and we've seen it, right? Like this is what the chart looked like before. Let's go over here and look at that. But yeah, you could see what the charts were looking like. It was looking like it was about to take off, but it was literally just a bull trap, and we did not continue that breakout, right? It looked like it was going to keep going, but we did not continue that breakout. So that's what it looked like before. And if you look at it now, like, yeah, we broke out, but it was a bull trap. We got rejected right up here at that 73K resistance. We got up to like 73.8K. I guess we could say 74K resistance. And then we literally just got rejected from there and pulled back. So that's not good. That's not good. And today I really want to talk about what comes next here. I want to talk about what comes next and what I think is about to happen. And there's a few things that's about to happen inside the financial system in the US, right? So one of the things here, let's wait for this to load up. So we have four different things coming up. We're going to see the inflation rate. We're going to see all that good stuff. We're going to see a lot of stuff, popping up inside the US, right? So we have the core inflation rate month over month, the inflation rate of year over year, and a core inflation rate year over year. So we're going to see that coming in on the 11th. So if we're going to see that on the 11th, that's just in a few days, right? Right now it's the 9th, right? Right now it's the 9th of March. It's Monday, right? The 11th is going to be on a Wednesday. So on Wednesday morning, 8:30 a.m., before the stock market opens, you're going to see the inflation rate, right? So that is a huge deal. That's a big deal. And we're also going to see whether or not they're going to do interest rate hikes as well. So we'll see if they heighten the interest rate. So that's going to be, or lower the interest rates, right? That's going to be a really big deal for the market. That's really going to start to control things. And then so like I mentioned before, the home sales thing doesn't really matter, but we have the inflation rate that's going to be shown on the 11th of March, and that's another housing things. And then the job openings, that's going to be another big thing. And the GDP growth rate for Q2, so quarter over quarter, well, technically Q1, that's what it is. But we're going to see the GDP growth rate. That's going to be on the 13th of March. And all this other stuff, core price, PCE price index. We're going to see that. So we're going to see a lot of different things in the job openings. That's going to be another big thing. So the 11th and the 13th, those are two important days that you guys got to remember. The 11th and the 13th. So that it might be big enough to move the markets. I know the inflation rate usually does move the markets. And then over here, like the GDP, like that could move the market as well if it's not too good, right? But usually the inflation is going to be the one to move the market more than anything. So that's primarily what we have to pay attention to. So yeah, that's what I'm really focused on right now. And I'm going to see what's going to happen to pay attention to. And then on top of all this focused on right now, we're also going to be looking at the technical analysis here. So we're going to be doing the technical analysis here for Bitcoin as well. So shout out to everybody that just came in. So yeah, shout out to you guys, and big shout out to I Just Buy More for being our subscribers, right? We just got the first subscriber gave us a subscription and a gifted subscription. So that's 2 from I Just Buy More. So big shout out to you again, I Just Buy More. You just bought more, right? So let's go over Bitcoin here now. So as you can see with the whole overall market, things pulled back. It was a bull trap, right? We got trapped. Well, we didn't get trapped. People that bought in got trapped and didn't listen, right? Because this signal right here is what we call two different things. We can call it, right? We can call this thing 2 different things. We could either call it a symmetrical triangle, a bearish symmetrical triangle, since it came into the symmetrical triangle from a downtrend. It's a bearish symmetrical triangle. Or we can call it a bear pennant. People call them whatever they want. Bear pennant, bearish symmetrical triangle. Either way, it's a bearish signal, right? And it was a bull trap, right? We've seen it break out to the upside. We've seen it break out to the upside, and then it immediately got rejected at 74K. And now it's pulled back. So that's a bearish signal. And then if you look at the MACD here, like we did just now have that big dump and that pullback. this thing could easily continue to pull back. Now, this is the percent R trend exhaustion. Sometimes whenever you see this happen on the percent R trend exhaustion, sometimes you can see a recovery from here, right? Sometimes you can see this thing recover. This blue line here is the long-term trend, white line is the short-term trend. Sometimes you can see them both recover and then continue upwards like that. But a lot of times what happens is it does a bull trap. And all those times I said bear trap, I meant bull trap, not bear trap. Sometimes you can see it do a bull trap where it tries to come up and then just comes down even further, right? And this happens a lot, especially when you look at the larger time frames like the weekly chart. When you look at the weekly chart does these bull traps on the percent R trend exhaustion inside of bear markets, right? It does these bull traps inside of these bear markets. And in the 2022 bear market, we've seen the same bull trap being played out. We've seen the same bull traps over and over again. What do you think's happening now? We had the same small bull trap here, and now we're probably about to create another bull trap, and then it's going to continue downwards. So this is definitely a bear market. It's exactly what happened in the 2022 bear market, right? If you come all the way back here, you see the exact same thing happen in the 2018 bear market. So there is a possibility that we're going to end up seeing this thing being bearish for the rest of the year. Now, can we get a little bit of a recovery right now? Yes, possibly. You could possibly see this thing recovering for the next few days, maybe even a few weeks. But I'm telling you right now, like these traps, you do not want to follow these traps. Like look at this candlestick right here. Let's go ahead and take off all the drawings. Look at that huge candlestick, right? You see that huge wick part on the top of that candlestick. This is something that, you know, a lot of people can mistake for bullish buying pressure. But all this means is that the sellers did not allow this to break out, right? The buyers tried to push it up, but they were too weak, and they did not. The sellers did not allow it to continue to break upwards. So that's really all that means, is that the sellers are really stronger than the buyers at this point, right? The sellers kept it from going up. The buyers couldn't keep it up, right? But when you see this candlestick here with that big wick end right there, you see that the sellers were able to push it down after the buyers did not want it to go up. So as you can see here, the buyers stopped us out right here on this candle wick, right? The buyers stopped us, but immediately sellers started to continue to push it down, right? Sellers immediately started to continue to push it down. Now you see with this one right here, the buyers pushed it up, but sellers immediately pushed it right back down. Now the buyers are trying to push it back up. If we do not continue to break out here, we are going to see a massive, massive dump, because the sellers are going to do what? They're going to push it down. And that is the goal of the sellers right now. They're trying to continue to push this thing down, right? So let's go back to the 4-hour chart and look at that. So again, big shout out to everybody. Big shout out to I Just Buy More for that sub. But like I was mentioning before here, when you look over here at the 4-hour chart, right, it might look like we're about to take off here, but I don't think that we've bottomed out yet, right? If we do not break out at this resistance at 68K right here, let me get this drawing. So if we don't break out here at this 68K Fibonacci, then we're going to see that dump continuing to bring us down to 60K. We're going to hit 60K pretty soon if we do not break out soon, right? If we do not break out soon, we're going to see that 60K dump. And that's pretty much what I'm waiting for. Now, this is the daily chart. The same exact thing happened on the daily chart before, right? We had a bunch of selling pressure, and then the buying pressure came in, but it was very weak amount of buying pressure. And then immediately selling pressure took over again. Now we're seeing the same thing. Buying pressure, but it's not enough buying pressure. It's probably going to end up dumping back down again. All right. So if we do get more buying pressure coming in like last time, because if we look at last time, it was 2 waves of buying pressure. This is the short-term trend on the percent R trend exhaustion. Short-term waves on the buying pressure as the long-term trend stays oversold and just stays down, right? So if this happens again, then we could see another little bit of a breakout and then a continued dump downwards. So what would this look like? This would look like us coming up here to 68K, possibly 69K, getting rejected and dumping down again, and then coming down to 60K. So we got to see what happens. If we can break past this 68K, 69K resistance and get back up to 73K, then we have better odds. But then we also face the risk of having a bearish double top. So we don't want to see it top out again at 73K/74 because we got rejected right before 74. But we don't want to see us coming up here to 73K again and then getting dumped, because that's going to cause us to have that bearish double top signal there. So we don't want to see that. We do not want to see the bearish double top there. All right. So that's kind of what I'm looking at right now for Bitcoin. This is pretty much how I'm, trying to navigate this thing. So let me know what you guys think about this so far. So far, I think that we're inside of a good space here for Bitcoin, but all it takes is one negative thing to completely bring us down. And remember what I said before, we have all this different information coming out, all this different financial information, right? So we have the core inflation rate, right? We have the inflation rate, the year over year, the month over month inflation rate coming out. They're going to make the decision whether or not going to do a rate hike, rate cut. Depending on what they do, maybe they pause it. Depending on what they do, we're going to end up seeing the market moving. All right, in whatever direction it's going to move, it's probably going to be a significant move. So we've already been bearish the whole time. We have no reason to be bullish right now. We have wars going on. No peace treaties have been made. Oil is going up. The price of oil is going up. And all it takes is for one more thing to happen for this to continue to be a bad situation, right? And then on top of all that, we also have the job openings coming out on the 13th of March. See how many job openings there are in the US. And then we also have the GDP growth rate. So we're going to see if that is up as well, the quarter over quarter. So we're going to see what's coming in, core PCE price index coming out. But the main thing you really want to be focused on is the inflation rate that's going to be coming out on the 11th, right? That's the main thing. That is going to be the main thing we got to focus on. So that's what I'm focused on here when it comes to Bitcoin. Now, if we just want to talk about short term for you people that are trying to trade, this is the 30-minute chart. So I guess we can look maybe even at the hourly chart. Let's see. Actually, let's do the 15-minute. 15-minute is going to break it down on a much shorter scale for the people that are looking to trade Bitcoin right now. And look, I'm not a financial advisor. None of this financial advice. We just kind of breaking it down. But look, this is the %R trailing exhaustion. As you can see, this is the overbought area on the %R trailing exhaustion. Usually we have a huge pullback whenever it happens. We just got that signal again. So we could possibly see this pulling back even further. So I would say be careful with if you're trying to buy right now, be careful, because if this thing continues to pull back, it's not going to look too good. We're already starting to see the selling pressure on the MACD as well. Now, could this possibly be a scenario where we see it, to see this as like a false breakdown, right? And then it just, boom, comes back up and then starts rallying again. Yes, that's always a possibility. And like I said before, if that happens, we're looking towards 68K. So if that's like a false breakdown, we're looking towards 68K. If we bring up the 5-minute chart, this could kind of give us a little bit of a thought of what it's doing. Yeah, it quite possibly could be that false breakdown like we've seen here. This was a false breakdown and it continued upwards. And now you see this coming down even further and trying to continue back upwards. So if it does continue back upwards, then it could be a false breakdown. But I don't believe that it's overall a false breakdown. I think overall, when you look at it from a long-term perspective, we're doing exactly what we should be doing. We're trapping the bulls and we're using them as exit liquidity. That's what's happening. The bulls got trapped up here. It used as exit liquidity. This is what the whales do. As things go down, the whales try to push it upwards. And when they do that, all the normies buy in and then they dump on their heads and then they continue to sell off. This happens during every single bear market. Every single bear market, people think it's going to be the scenario where it starts taking off again. I mean, look at Zcash. Zcash used everybody as exit liquidity. All right. Zcash used everybody as exit liquidity. And I told people time and time again, $210 Zcash, what happened? It went down to $190. Zcash got rejected all the way up here. And I was like, yep, we are down, 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 down. And that's exactly what happened. We continued to go down. And now we're still back down here at this support. We just now smacked off the support at $190, like I mentioned before. And I think we're going to continue to have a sell-off here on Zcash. So a lot of different things are selling off, and I'm telling you guys right now, you want to pay attention to who you're watching, who you're listening to. A lot of these different crypto influencers are giving you guys some bad, false information. Anyways, Zcash right now building a descending triangle. I know it's probably hard to see because all the other drawings I have, but descending triangles are bearish patterns. So just giving you guys a heads up before this thing goes below $190, because I know a lot of people probably bought this, at the top. But yeah, as you can see up here, descending triangles, bearish patterns. So be careful with that. But yeah, let me know what you guys are thinking about this. Be careful with that. Let me know what you guys are thinking about. So yeah, let's get back to Bitcoin though. And actually the total 3 right here, this is the crypto total market cap excluding Bitcoin and ETH, right? The total crypto market cap excluding Bitcoin and ETH. All right. So this is such an important metric here, because this really tracks where the altcoins are going as well, right? So this is kind of a prediction that I was making here, right? This is a rising wedge, which was a bearish pattern, but now we're kind of seeing it's more so forming almost like a bearish pennant here. Let's draw this out. This is more of a bearish pennant. So yeah, we're forming this bearish pennant, and here is the bearish pennant right here. It's a bearish signal, bearish pennant. And as you can see, as we're forming this bearish pennant, my prediction was that, hey, we come down, and it doesn't really have to happen inside of this time frame. This is just me drawing what it's going to end up looking like, the pullback, right? But overall, we're probably going to have another massive pullback, right? That brings Bitcoin down to 60K, and then eventually down to 50K at the bottom of that Fibonacci. And then after we see that, now we also got to look at this, because if Bitcoin goes to 50K, then the crypto total market cap excluding Bitcoin and ETH, which is all of the altcoins and stablecoins, I believe so, comes all the way down here to about 500 billion inside of market cap. Right now it's at 699 billion, so it's at 700 billion right now. We're going to see it losing 2 billion. We're going to see $2 billion leaving the altcoin market. What did I say about exit liquidity? The last 24-hour trading volume is up on altcoins. All coins actually, the last 24-hour trading volume. That means that the normies are buying in right now. The normies are trading more, and they're putting more money in because they think that we've bottomed out. So if the normies think that we've bottomed out, what do you think is going to happen with the people on top of the whales? If we think it's bottomed out, they're going to be like, nope, not yet. They're going to bull trap you guys. They're going to bull trap you. If you look at the altcoin market cap, let's look from 2021 to now. The altcoin market cap is really underperforming. If you look at it, it barely was higher than the 2021 bull market. The peak of the 2021 bull market for the altcoins was 1.795 billion. So it's pretty much 1.8 billion. The peak of this one for 2025, we've seen it at 1.99 billion. So how do we go from 1.795 billion to 1.99 billion? That's because we barely had a change in it. There was barely a change inside of it. The total market cap was high, right? 3 billion in 2021 at the peak, 4.3 billion. This is every single crypto, 4.3 billion compared to 3 billion. What was the huge difference? The huge difference factor. Everything went in Bitcoin. Nobody was really focused on altcoins for this season, for this bull run. So this is leaving a lot of people to think that altcoin season is here. There's not going to be a traditional altcoin season in the same sense that people are thinking. The new altcoin season is now just individual altcoins breaking out here and there. We're just going to see individual altcoins breaking out here and there. We're not going to see all altcoins taking off as Bitcoin sells off. We're not going to see that anymore. We're going to just start seeing individual altcoins having their time. They go up, they die. Just like what happened with Zcash. It went up, the hype died down, the hype moved on. So if we pull up Zcash here, we can see exactly what I'm saying. Zcash, again, like everything, like all the other altcoins, let's pull up the yearly chart. It went up, it had its huge rally, and then the hype died down. That hype then shifted towards other altcoins. It went from 11.4 billion down to where it's at now at 3.3 billion. The hype switched to other altcoins. And this is how the altcoin season's working now. It's no longer an altcoin season. It's now every man for himself. So the altcoins are going to take turns doing their thing. Individual altcoins will do well. New altcoins like these BNB coins, these random coins, they're going to pump and then they're going to dump as usual. So I really wouldn't be focusing on any of the new coins. They're going to pump and dump as usual.